Tesla, what's happening? We got a nice little 35% drop, but now it looks like it's rebounding. How convenient. But is the rebound for real, or is this a bad sign for the stock long term? That's what we're going to talk about in this video, and also why I think Tesla is one of the most important stocks in the stock market. And a lot of what we're going to talk about today, we talk about further in this free training. There's a link in this video and down below in the description and comments. It goes over our entire strategy that we use, myself and most of our Fallible members. And we're up over 50% this year, so we're doing pretty well. And that's with managing our risk. It's very easy, very simple, very effective. If you want to learn more, check out the training. So the reason why Tesla is so important when you're analyzing the market and why we keep doing videos about it is because it's a really good sentiment indicator. And what do we know about markets? Markets are all about sentiment. So markets move with either risk on or risk off. Risk on being people buying stocks because they have a higher risk tolerance. They're willing to take on risk. Risk off is when they're selling their stocks and going into safer assets like bonds. And what you got to realize about the stock market is that stocks mostly just move together. It's very rare when the stock market is collapsing that you're going to see some stocks shooting up higher. It doesn't work like that. Steve Cohen, the famous fund manager who gets in trouble with the law all the time with all his insider trading, who the Billions character Bobby Axelrod is based off of, he's the one that said that a stock's price movement is based mostly off the market. So 50% of that movement comes from the broader index, 30% comes from its specific industry. So in Tesla's case, how are other tech companies moving? Not car companies, because it's kind of in its own category with the tech guys. And then 20% of the movement comes from the stock itself. So for any stock, if 50% is according to the index, then yes, most stocks are going to be moving together, which is why when you're trading or investing, you always got to be aware of the overall trend. You don't want to be buying when stocks are falling, and you don't want to be selling when stocks are going higher, unless you're taking profits, of course. And you can see this movement in Tesla from where it started falling to where it's bouncing is very similar to the same movement in the NASDAQ itself. Dropped down, bounced. So if you look at it that way, really all risk assets move more or less together. And Tesla, I think, is a really good indicator of how much risk the market wants to take on, at least the retail market, because we know there's two sides of the market, right? There's the retail guys, so the Robinhood investors and people with accounts at like TD Ameritrade, things like that. Then you have the institutional guys, the big money, what they call the smart money. Now, I wouldn't say Tesla is the best indicator for the institutions, but for retail, definitely. Because everyone loves the stock, and every person, if they're getting into the stock market, they know something about whether they should be buying or selling Tesla. For some reason, whether they actually have good information or not, they're looking at Tesla. So that's why when you see price action like this, like what's going on here, you can sort of use it to gauge what's the risk appetite of retail. Because if they're done with Tesla and the stock is going to fall, then we're likely going to see the same thing happen in the broader index, because that means they're done with stocks in general. So look out below. Now, one of the best ways to gauge sentiment on these stocks is based off events. So stocks have certain events, right? They report earnings, they issue dividends, they release statements, there's news that comes out, all that type of stuff. And what you want to look at is how the price in the market reacts to that news. Because in stocks, it's not the news itself or the fundamental data itself that's important, at least with the way we trade. What's important is people's reaction to it. For example, have you ever seen a company release positive earnings and then the stock price drops? Well, the reason it's dropping may not be because the earnings are bad, because they're positive, right? They made money, but it's because they weren't good enough to meet investors' expectations. So if the bar was here, even if their earnings are positive, they might have fell right here. So investors are going to dump the stock because of that. So it's all based off expectations. So in my opinion, the only way you're going to know if news is good or bad is depending on how the market reacts to it. And that's what we call inflection points in the market. So if you take this piece of news and you look at the market and it rockets higher, that might be a really good sign. Same thing, like I was saying before, if really positive news came out, or at least you thought it's positive, and the stock tanks, well, then investors might be done with that stock. So in Tesla, we had a few pieces of news that came out lately. On the 31st, the stock split happened, right? What was it, 5-for-1? And what happened to the share price? It jumped. People were very excited, bought in. And again, this is a whole retail thing because prices are cheaper, they can buy more shares, and they get excited. And right after that, on the 1st, Tesla announced that they're going to sell 5 billion more worth of shares. So you had two big pieces of information come out, and what happened to the stock price? Well, first it jumped and then it fell. So the way that it fell is not not a good sign. I would say that's bearish. While investors initially reacted really positively, they turned around and ended up selling. Now, if you notice here, if you compare this chart to the NASDAQ kept going up. It went up on the 31st, the 1st, and the 2nd. Then it finally turned around on the 3rd. Tesla started turning around on the 1st. Had a bad close that day. The 2nd was pretty bad. 3rd, pretty bad. So in this case, and it's not always going to work out like this, but Tesla was looking like a leading indicator, which is what I was explaining before. If you want to know what's going to go on with the general market, watch Tesla. So we don't know for sure what this means because we got to see the price action play out a little bit. Another thing that could have happened is that just the market was overbought, because it definitely was. That run was crazy and we haven't had a correction in a long time. So it could have been the case that regardless of what news came out for Tesla, it was time to take a break. So the sentiment analysis is not perfect. You still got to mix it with other types of analysis. And really, if we're doing straight technical analysis here, what happened? Tesla fell down to its 50-day moving average right here, this orange gold line, and then it bounced, which is what you would expect it to do, because these moving averages provide support, and they aren't magic lines or anything. It's just psychology. A lot of people are following these lines, so when they see it hit, they think it's a good value and they want to come in. And you will usually see a bounce like this. And you can see the same thing was mirrored in the NASDAQ and the S&P. So what you really want to look for going forward is if it holds this bounce, if it at least consolidates within this range. So what could happen going forward here is that Tesla just moves up and down between this high right here, which is around 500, and this point right here, 328. And you'll see this moving average is going to keep moving up, right? Because these forward prices are higher, so the average should move up, and you might see the consolidation of Tesla get smaller and smaller. So you could see something that looks like this over time. Price rotating up and down, up and down. And then what do we expect to happen? Whenever there's consolidation like this and compression in markets, we expect the price to launch one way or another. Now, if after this consolidation price dropped, that would be a very bearish signal. And you could point back to these two events right here and say, okay, this is the continuation of what investors thought there. If it launches higher, hey, then things are good. This trend will keep going. Another potential outcome, if we take away that pattern, is that Tesla stays around here. We get this little bounce, but in a few days we start seeing it go down again. And if it breaks this 50-day line, then that's once again a technical signal. It'll be bad for Tesla and bad for the market in general. As I'm recording this, the thing is already going flat. So this bounce might not last. Now, as far as Elon's management doing these two things, I think he's doing absolutely the right thing. Stock split, great idea. Get more people into the stock. And then he did the 1-2 punch, right? He issued shares right after that. Collect as much money as you can while you can. Benefit off this sentiment, right? People want your shares. You got a great company doing a great thing. And maybe I shouldn't say great company. We don't really know what's happening with the accounting and the financials. But I'm feeling way more confident as Elon keeps issuing shares, collecting the money when he can. Because you don't want another 2008 scenario where Tesla is just on the brink. Elon's other companies are on the brink and he's sleeping on people's couches because he doesn't have any money. So raising money when times are good is the way to do it. And then you stash that money away for the rough times that are absolutely going to come. I know we all forgot that they could come because Powell has been keeping these markets up, but they're coming and Elon is preparing. I was actually watching a video about Tesla cars recently, and they were saying that the Silicon Valley process applied to car manufacturing is kind of weird, because the idea in Silicon Valley is get out the MVP, right? The minimal viable product. Get it out to the customer, start testing, and then improve the product off their feedback. Now this works in software, right? Because if there's bugs or if they want to add features, they add them and then all their customers automatically have them because it's all virtual, obviously. But in physical cars, if you're making improvements, well, you're not going to be able to disseminate that to everybody. So the early adopters kind of get screwed. So in that video, they were showing parts of Teslas that are basically zip tied together inside the machine, which is not the best way to do it. You shouldn't be putting a car together with zip ties. Their paint is supposedly pretty bad. It's soft, gets scratched a lot. They create a lot of panel gaps in the car with their manufacturing process. They don't have a heat pump on the earlier models. So if you're in a colder place like Michigan, well then to get heat into your car, it's going to drain the battery like crazy. And these are all things that they're fixing now. Like the newer versions do have heat pumps in them. But it's funny because the earliest adopters are probably getting the worst product. But everyone is just fine with it because everyone loves Tesla. They're okay, they'll live with it, which is kind of another indicator of sentiment. Now overall, of course, they're great cars. It's just that Tesla is a young manufacturer. These other guys have been doing it for 100 years. And they still have problems too. They have all these same problems. Panel gaps, bad manufacturing. But over time, Tesla should get better and better, which is why I'm happy when Elon is raising money, because just in case there is a hard time, they can keep improving. The worst would be if they shut down. Now with our strategy, we have been in Tesla since 4/1, so April 1st. That's all the way back here. And actually we were in Tesla before that, like way from back back here since November, I think. But in that recent drop in March, we sold our position and then we re-entered, and then we've been holding it ever since. And the way we do that is with momentum, which is what we go into in depth in this training. But basically what our strategy does is rank all the stocks in the NASDAQ by their momentum rankings, which is what this TSI is right here. It's a trend strength indicator. So the higher the number, we know the stronger the momentum in the stock. And what we do is invest in the 5 stocks with the highest momentum. And each month we do a rotation. So we sell the stocks that lose momentum and reinvest in the ones that have the high momentum still. Because this list is always changing, right? Depending on what happens in the market. And that way, with that once a month rotation, we're always in the stocks that are moving higher the fastest, because that's what momentum is. And it's great because it's all quant based with numbers. It doesn't take any research. I spend literally 15 minutes a month doing it. And it's all thoroughly tested. Everything is in place. It's a systematic strategy. So I don't have to think about when I'm buying or selling. It's already set. Prevents a lot of over trading and a lot of stress. I was very glad to move to systems from discretionary trading. Is Tesla a good stock? Well, you could make a million arguments that it is a good stock and a million that it isn't. Or you could use one simple number to tell you. And that's what Tesla is ranked number 2 on this list. And that's why we're still in it. And we're going to continue to stay in it until it drops out of this list or it hits its risk point, which for us right now, it's at 215, which is very, very low compared to where we are right now. And the reason we're comfortable with keeping it that low is because we've been managing this stock properly this entire run higher. And what's the most important thing in investing and trading? Risk control. And risk control is not only about setting a stop about where you'll get out of the stock when it drops low enough, which for us, as I said, is that 215 level, so way down here. But risk control is also taking profits as stocks move higher. So we have a systemized strategy for that. You can see in these other examples, P1, P3, that all stands for price target 1, price target 3. So in Tesla's case, we hit all 3 price targets because this thing is up so much. Like our total return in the stock right now is over 100%. But taking profits as it keeps moving higher, that ensures that you take money off the table so that when the thing turns around, you're not getting a big hit. So if you look right here, we only have 12.5% of our original Tesla position because we've been selling on the way up. So even if this thing drops down to 215, we aren't losing that much. We're going to still be profitable. And the reason we're keeping it so far away is because we think this thing has more room to run, which isn't based off technical or fundamental analysis or anything. It's purely quant. So again, when we go down to this number, we see it's still number 2 on the list of the TSI. So we know it still has room to run. And that's how I like it. I don't like making those discretionary decisions anymore. It's too stressful. And it doesn't work well. Being systematic has really done wonders for my returns. You can see right now with this full strategy, not just Tesla, we're up 52% versus the market, which is up 30. And since 2008, it's almost 2000% versus the market, which is 552. You can see the equity curves right here, our strategy versus the market. And the reason why they separate themselves so much is not only because we get better returns, but it's because we manage the downside better. So during big dips in the market like this, what we saw in March, we're out. That's why we sold our Tesla position here. We got back in, but it was the right move to sell here too, because who knows what was going to happen. No one knew that the market was going to rebound like that, no matter what they tell you. That's why you manage your risk. So when the time it doesn't rebound happens, you're safe. And once again, we're in that situation right now. Is this thing going to rebound? It's rebounding so far, but what if it turns around? That's why you got to do that management. That's why risk control is important. Anyway, this training goes more into that strategy. It's very simple to use. You'll see how to do it. There's a link in this video and down below in the description comments. Definitely check it out. It's free. And really, it's not just me that's bullish on Tesla. Some of the smartest analysts in the game are bullish as well. For example, this guy.
Bro, did you hear that Tesla just sold $5 billion worth of shares? What's going on? Do they not have enough liquidity or what? Are they going bankrupt? I don't know. Chill out, my child. This is great for Tesla because that additional $5 billion is enough to build another 3 to 5 gigafactories, which means more production and buying more equipment to bring costs down. So trust me, Tesla isn't going bankrupt. Man, I'm happy to hear that. I'm actually going to buy more shares.
I mean, you can't lose with the smart money behind Tesla like that guy. Even Tom Cruise isn't on Tesla.
20% drop in Tesla share price? Yeah, I'm backing up that truck and I'm buying more. You know why? Because sometimes you just got to say, what the fuck? Make your move. Show me the money. Show me the money. Woo!
I mean, how are you going to argue with the American icon, Tom Cruise? Love that guy. Anyway, check out the training and subscribe to the channel if you haven't already so I could see you in the next video. Do all that and I'll see you then. Stay fallible out there. Bye.